Good morning, traders. It is 7:01 a.m. Chicago time on Wednesday, the 13th of January, 2016. Derivatives trading involves substantial risk of loss that is not suitable for all investors. Past performance is not indicative of future results. This broadcast is being sent out 1 hour early. It's pre-recorded. Reason being, I have school driving duties today. For the kids. So this is why I have to record this early. In any case, a quick overview of what we have overnight for news. China's exports fell 1.4% compared with last year, which was far better than the 8% drop that was anticipated. Imports tumbled 7.6%, leaving China's trade surplus at 60.09 billion. Far above the 53 billion that was expected. A Chinese customs official blamed weak external demand for the drop in exports. We saw a pretty decent pop on that news at 8 o'clock Central last night. Eurozone industrial production fell 0.7% month on month in November, missing the 0.3% drop that economists were forecasting. Year over year data also disappointed, growing 1.1% compared to 1.3% that was expected. Markets sold off on that news, which came out at 4 a.m. Central, 10 a.m. Eastern. IMF's Christine Lagarde said interest rate hikes by the Federal Reserve risked hurting emerging markets if they were too aggressive. As you know, a lot of emerging economies are pegged to the dollar, making the selling of their wares, of their product, more expensive to consumers. Looking at the calendar for today, we have DOE U.S. gasoline inventories, crude oil inventories, and distillates at 9:30 Central, 10:30 Eastern. Gasoline inventories expected at 1.8 million barrels. Oil inventories 2 million barrels. Distillate inventories 800,000. And then at 1 o'clock Central, 2 o'clock Eastern, looking for monthly budget statement, expecting negative 10 billion. And then as far as speakers, at 7:20 this morning, which is in about 15 minutes from now, Fed Speaker Rosengren on the economic outlook. Then we're looking for Fed Speaker Evans at 11:30 Central, 12:30 Eastern, also talking on the economy and monetary policy in Iowa. And then we're looking for Fed's Beige Book at 2 o'clock Eastern, 1 o'clock Central. That's what's on deck for today. As far as yesterday's action, so again, yesterday we had a situation where Hypo 2 played out first. If you recall, the overnight high was somewhere around there. In fact, let me check to see. I forget what the number is. I keep a lot of numbers in my head, and I forgot that one. I guess I'm getting old. 3750. So the primary hypothesis was the expectation for an open responsive selling. Remember, responsive means we're moving towards the prior day's value or range. I did update it in my website, and in fact, just as a side note, the website has been completely updated. It's a responsive website now. I'm going to pick up blogging again and posting studies and such. I have not done that in a long time. I think that was an important resource for many that I've had to let go of due to the number of things I'm involved in. Anyway, you can find that in the glossary on the website, what responsive versus initiative means. Yesterday, the expectation is responsive selling down into the 1922 area. And then I expected it to chop around and then take out the 3750, which is the overnight high, and start walking its way up. What I had read based on the context is that the market is likely done on the downside for now, and is about to go through a corrective move up. Um, and then the second hypothesis is exactly what happened. Uh, Open, take out the overnight high early at 37.50. It pushed to the naked point of control, got to 1940 and a quarter, so it pushed through by 5 ticks. Then it fell through the mid, back into the prior day's range. Test the value highs down here. It missed it by a few ticks. Test it, pull back to mid, chop around, and then fall through. And then the target was 1950 yesterday on Hypo 2. The extended target, if you recall, again, you can always watch these videos to see where the stuff is coming from. The extended target was 1905. 1905, the market got to 1905.75, at which point we saw a quick pop, an inverted head and shoulder formation here with a skew. Actually, it looks more like this. This is your left shoulder, head, right shoulder, inverted head and shoulder formation, and then we see the market break through that pivot point with a lot of volume. There was some pretty good last hour buying yesterday. Very strong delta, as you can see here, almost zeroing out zeroing out the delta for the day when it was actually negative 28,000 at some point. So some pretty good buying on this run here. The market pushes developing value high. The point of control is higher. Value is higher. So when we compare value, it's higher. The point of control is higher. The point of control on the higher end of the profile. The market pulled back to the IB low, which is also the mid, which is also VWAP. And it stopped there. On the reopen, it went down to 1922, and then it shot up on the Chinese news, and then it shot up again on the European Open. Let's take a quick look at that. Here it is. Again, white on this chart is the value area. So here it is. It pulls back a little bit to 1922, and it shoots up into the trade balance release by China, pushes again, and then sits sideways until the European Open. It pulls back, and then the European Open pushes it to new highs for the session. Note the high of the session is the low for non-farm payroll from last week. Those are exactly the same at 1946.50. This is why we record the high and low of the FOMC or any news that drives the market in an impulsive way, any value changing news. We record the high and low and the SOC. SOC stands for scene of the crime, or the price at the last price at which the news came out. The theory behind that is that the auction is being disrupted, and so the market generally digests that news, and if it's not consequential, which most of the time it isn't, it returns and resumes the auction from that scene of the crime price. And that's why we record these. But the overnight low, the overnight high is again the NFP low. The market hit some resistance there and has turned down and is now trading beneath the overnight point of control against the mid and is in range. Now, the trader bites fairly early today. We still have an hour and 20 minutes to do something. And so it's hard for me to predict what things are going to look like in an hour. But it's likely to open somewhere in this range. If it does, my primary hypothesis is again to test the prior day's high, chop around, and then fall back to test yesterday's close, which is in the 24 area. Yesterday's close is exactly 25 even. And then it's likely to chop around and then continue higher again. The probability of the overnight high and low being hits around 27%. Again, past performance not indicative of future results, but this is a pretty decent day for that to happen. It's the range is 23 points, which seems small. It's not, but it could easily take out the overnight low. So my primary hypothesis is responsive selling, chop, and then potential for a push higher. We've been pushing higher on the close. You could see it here on Monday, and we see it here on Tuesday. So I'm expecting it to be just the same again in the absence of any revaluation or change in context. We expect the market to continue in the current action, almost like a Newtonian law. So I expect it to chop back into the prior day's close, potentially take out the 1922, chop around here, and then try to rise up on the close. That's the primary hypothesis. Secondary hypothesis, it pulls back. It pulls back, tests out the prior day's point of control, chops around, pushes to 46.50, chops around again, and potentially pushes up into the close. The tertiary hypothesis is the opposite. It tests higher, goes through the point of control, and then just throws up, takes out that 1905, and then makes a run for 1900 again and lower, and then we resume our pullback. But overall, the market looks to be resting up, and since it is, these last 4 days get a new microcomposite profile, and you see the point of control of this microcomposite is 1938 with a secondary point of control at 1915. It's a double distribution microcomposite, and so it is likely to test both sides. So here we are, we're trading at 1935, just below the MC at 1938, and that's why the expectation is for it to move down into this low volume node. The low volume node's at 1924. Again, yesterday's close is at 1925. That's the reason for the primary hypothesis. So chop, push down, 1925 is the target. If it does not hold the 1925, the 1915 again becomes your target below. That's what I have for you for today. Not much to comment on crude oil. Still dilly-dallying. It ended up pushing some more. By the way, crude oil had a massive bid at $30.10 yesterday afternoon. Somebody was bidding around 1,500 contracts. All of them traded out all the way down to $29.93, making new 12-year lows on crude during the day session. But all 1,500 contracts. Here's some trivia for you. What is the value of 1,500 contracts of crude oil? What's the notional value, and how do you compute it? Well, the notional value is $30.10, which is where the 1,500 traded. $30.10 times 1,500 contracts times $1,000 per contract gives you about $45 million filled right at the 30.10. Somebody took on $45 million in crude, and then we saw an offer a little bit higher. I forget what it was, around 30.60, to offer about half of those out. So a big buy trade in there in crude, something to note. The 30.10, and then from there it climbed. It was unable to retest that level once it filled. So you see this zipper here was the market chipping away at that 1,500 lot, and it finally trades. It causes this spike lower, which is a small stop run. Those people who front ran it, and then it just shot up from there, and that trade is in the money. Whoever bought those is in the money pretty handsomely. I'm sure it's a huge speculative account or institutional, but very interesting to note. Very clear on S5 Bookmap how that traded out. Anyway, I'll leave you with that. I'll comment as the market opens. Hopefully you're gaining something from these trader bites. I want to remind everyone that I've had to postpone the public AMA, the monthly AMA, from tomorrow to next Thursday. I released a new website. Again, I'd like you to check it out. I've released a new website, and there's some little technicalities there that need to be handled before I do the AMA. Good luck, and I'll catch you tomorrow. Take care.